All right, everybody, welcome back for another deep dive. You know how we do it around here.
Always excited to be back.
We like to find some fascinating stories or events or whatever and really just go deep on them. And today we're going to be talking about something that I think a lot of people are still scratching their heads about, even though it happened a little while ago.
Absolutely.
March 4th, 2025, big crypto crash. And we're going to try to figure out exactly what happened.
Yeah.
And we've got some excerpts here from a really interesting article called Crypto Market Downturn, Bitcoin and Ethereum Plummet. So,
Okay.
should be pretty insightful. So to set the stage just a little bit, we got Bitcoin. It was down 9.48% on that day and ended up at 84,148.33 cents.
Wow.
Ethereum, even worse, down almost 14% at 2,103.06 cents.
Ouch.
And the total crypto market cap shrunk by 10.54%, ending the day at $2.76 trillion.
Yeah, that's a huge amount of money to just disappear,
Yeah.
even in the crypto world.
Right. Like, where does it go? Like, I don't understand, but
Poof. Exactly. But it's interesting because, just 2 days before this whole crash happened, we actually saw the market surging like crazy.
yeah.
Remember Trump's crypto strategic reserve announcement on March 2nd?
Oh, yeah.
That really shook things up.
It did. Everybody was super excited, thought this was going to be the thing that kind of legitimized crypto once and for all,
Totally.
Bitcoin shot up,
Mhm.
Ethereum followed suit. Everything looked amazing.
Yeah, it seemed like there was no stopping it,
And then, bam,
Yeah, what happened?
huge crash. So what happened? I mean, why the sudden U-turn?
Well, the analysts are pointing to something called risk-off sentiment, basically meaning that when there's a lot of uncertainty in the global market, investors tend to get a little bit spooked and they start pulling out of riskier assets like crypto.
Okay.
So think about it. These investors, especially big institutional ones, they've got these carefully crafted portfolios with different levels of risk.
Mm-hmm.
And when things start getting shaky, they rebalance.
Yeah.
They'll move some of their funds from those riskier assets into things that are considered safer, like government bonds, for example.
Makes sense. Yeah. So when you're saying that, things get shaky and investors get spooked, I mean, were Trump's tariff threats against Canada, Mexico, and China the next day? Is that what kind of sent everybody running for the hills?
I think that was definitely a big trigger, because those threats, they introduced a huge amount of geopolitical uncertainty into the equation. And the thing is, the crypto market is still relatively young,
Yeah.
It's not as established as traditional markets, so it's naturally more sensitive to these kinds of shocks and swings.
That makes sense. But okay, so if everybody's freaking out because of these tariff threats and there's all this uncertainty, why wouldn't everybody be selling off their crypto? Why is crypto different?
Well, it's not quite as simple as everybody just hitting the sell button at the same time.
Yeah.
You have to remember that not all investors react in the same way. Some investors, they actually see these big dips as a buying opportunity.
Wow.
They believe in the long-term potential of crypto and they're willing to ride out the volatility.
Yeah.
They're not in it for the quick gains. They're looking at the bigger picture.
I see. Okay.
Plus, there's the fact that crypto is decentralized. It's not controlled by governments or banks. And for some investors, that's super appealing.
Yeah.
They see it as a hedge against instability in traditional financial systems.
So it's not just this black and white, everybody's either buying or selling. There's actually all these different kinds of investors with different strategies going on.
Exactly. And on top of that, we can't forget about profit taking. After that initial surge that we talked about earlier,
Right.
a lot of investors who had bought crypto when it was low, they saw Trump's announcement as their chance to cash in on those gains.
Oh, yeah.
And when you have those big sell-offs, especially by early adopters or big players, it can really impact liquidity and create a domino effect where prices just keep going down.
Yeah. So it's like we had geopolitical uncertainty, investors rebalancing their portfolios, and then these early adopters taking their profits. It's almost like a perfect storm for a crypto crash.
It really was. And I think this whole situation, it highlights something really important about crypto.
What's that?
It's not this isolated, independent market that a lot of people thought it was. It's deeply intertwined with global events and investor psychology.
It's like crypto's growing up.
Yeah, okay.
Finally joining the adult table of global finance with all of its complexities.
Exactly.
So where does that leave us now? I mean, is this downturn a sign of things to come, or was this just like a temporary blip?
It's really too early to say for sure. I mean, crypto has always been known for its volatility.
Yeah, for sure.
The real question that we should be asking ourselves is, if something like a tariff threat can cause a 10% drop in the entire crypto market cap, that's a pretty significant sign
Right. Yeah.
that crypto is becoming a major player on the world stage.
It's not just this fringe thing anymore.
Exactly. And that's something that everyone needs to keep in mind as they navigate the crypto world.
Yeah.
Do your research understand the forces that are at play? And remember, this is a market that constantly challenges expectations.
It always keeps us on our toes, that's for sure.
Absolutely.
Well, thanks for breaking all that down for us. That was super insightful. I learned a lot.
It was my pleasure.
And for all of you listening out there, stay informed, stay curious, and we'll catch you on the next deep dive.
See you next time.
See you next time.